Hey everyone, we just got the closing bell for Wednesday, July 10th. You can see that it was a pretty big day for the S&P. We're up almost 1%. It's been a while since we've seen that kind of number, but unfortunately, it's still on low volume. You can see only 27 million out of 48. By the time we get the dark pool in, that might be about 35 million. Still well under on those averages. So it looks like we're just going to continue to drift up on low volume. It could happen for the rest of this summer. But again, the longer it drags on, the riskier we get inside of this market where we really just need a pullback pretty soon. Back to the MA50, the previous one we had went all the way to the MA90. This time, not necessarily that far, maybe just to the MA50, but we'll see. At the very least, we do need a reversion to the mean, to that EMA20, but it's pretty likely that it'll go at least to that MA50 this time around. So we're just going to keep watching out for that. We're going to stay neutral. It does feel like, hey, we're missing out a little bit, but guess what? That fear of missing out is what drives retail sailors into the markets, drives them to a high where institutions just finally decide, hey, it's time to dump this market. So we're not going to play into that game. We're just going to stay neutral and be happy with being flat or slightly up, not amazingly up if we had gone into the tech sectors, but our portfolios are still doing well. They're still up. So one portfolio over here is up. What is this? 123. This is so just on the day, up about 3.5% on the entire portfolio. That is pretty good for a neutral portfolio. So we're not going to complain. Things are going really, really well for us, even though we are not bullish, even though we're just pointed neutral. Our pairs are working very well for us, and we are continuing to move higher. So we're just going to continue to adopt that strategy. Everything I said this morning about VIX looking like it's going to move up, and it did start to move up today. We're up to 1290. We put on that call at about 1236. Let's take a quick look and see how that call is doing, actually. And VIX. So overall up a tiny bit, 2.3%. And so that's not surprising. This is not a big movement. So we're just waiting for a spike in volatility. Again, it might not happen this week, it might not happen next week, but sometime somewhat soon in the next 3 to 4 weeks, we're expecting a volatility spike. It's just that tomorrow we have the first stimulus that might actually make that happen with the CPI report coming out tomorrow. So hopefully you're not too far leaned bullish on your portfolios, because with the unknown action or the unknown numbers that are coming out tomorrow with the CPI, and we have the very, very first earnings being reported tomorrow morning, there's just heightened possibility of volatility, heightened risk for us to start reverting to the mean or pulling back. Again, doesn't mean it has to start tomorrow. It just means that the first possibility is tomorrow. And so we're just preparing ourselves for that. Other than that, there's not a whole lot to look at. Everything looks pretty much the same. RSP, SPY. Let's look at the RSP. RSP did pop up a little bit to the top of this triangle right here, but that's a pretty good place for it to come back down, right? So we're not going to get too excited about that. QQEV equal weighted, EW all-time high, and QQQ also all-time high. QQQ and QQEW looking much more in line than RSP and SPY. And that's a pretty big divergence. That really tells us that it is really concentrated in the tech sectors. And we just want to be very, very, very careful. And it does look like that if we're going to be long, we should be long tech. But again, if we start pulling back, tech is going to get hit the hardest. So SMH did very well today, made an all-time high over here. NVIDIA is starting to move upwards. I showed you this morning that a lot of these tech stocks are getting squeezed. APL, they're getting squeezed higher. So there was squeeze that happened over here. There was some shorts that were off sides. There was some market makers that needed to hedge themselves. That's what's driving this upwards. It's also happening, I believe, in Tesla. Yeah, still looks like it's still happening in Tesla. Probably not till maybe to 265 or 270, it looks like is where that might stop, at least for this week. So there doesn't look like there might be a lot more juice into this, but what there's earnings coming up pretty soon, so that's a different stimulus that might keep it driving higher. But for now, the foreseeable top is 270. So I wouldn't be betting too much beyond that for this week. But in any case, there are positions that are getting squeezed, mostly in the to tech sector, and so that's why I'm really wary. I'd rather, yes, we could try to participate in that, but we're going to play a little bit safer. We're not big dogs. We don't have millions and hundreds of millions. We don't have nearly the same level of data as the institutions. So we're just going to wait and see how they play it. And then we'll jump in after the picture is clear as to exactly what they're doing. Okay, so we'll take a quick look at the sectors and that'll round us out for the day. So today, yeah, semiconductors up really big. Same with home builders. Let's take a quick look at those guys. They're up quite a bit, but they're right into resistance, and there's even more resistance overhead. I'd be very careful because this looks like a continuation of the trend. Okay, just like that. So we hit that. There's a good chance that will come back down because the chances of a rate cut are slim, at least anytime soon. The September, yes, July, no, and then there's no decision in August. So we would need to stay in this environment for a couple more months. And so it's too early, I think, for us to speculate that home builders might start to pick up. And we'd really want to see data, like housing starts type of data, before we really started to make bets into the home builders. And then XLB, that's interesting. Let's take a look at XLB materials. So if you recall before, we said that XLB and XHB were the ones that we are not comfortable with, that we would be comfortable going short. And so for both of those to move up today is really interesting. But guess what? Once again, right into that trend line. So at the minimum, we'll want to see what happens Thursday and then probably Friday, and then wait to make our decision on Monday. If it breaks through, if both of those break through, then hey, maybe we're wrong and we might take these to the long side. But if we get confirmation of it moving downwards, then this trend is holding and it's going to keep on going down. So not yet. This is wait and see. And there may be opportunities in the home builders and materials sectors. What we really want to start watching is financials, though, because those will start reporting not tomorrow, but Friday. Starting Friday is when you'll start to see all the big financials start reporting. Then we'll move to the medium and smaller ones, and then we'll move into tech. So let's take a look at how financials are. Way at the bottom, up only 0.2%. What's really interesting, though, is that every single sector appears to be up, at least a little bit, even if it's randomly like XLF. But that is definitely a strong sign, but there is that huge separation between the performance of different sectors, like SMH versus XLF, 2.2 or 2.7%. 2.28% versus 0.12%. That's a pretty large disparity, even though everything's going up. So XLF hitting this purple line that we drew at some point, I'm not sure exactly when, but we drew it. And if we can get above that and then above this all-time high right here, then XLF starts to look interesting. But if not, then we're just going to, at the very least, view that it's going to stay in this channel range unless we test the bottom and break through. So with the banks reporting starting on Friday, this is just wait and see. It'd be way too risky right now to try to go in and jump into these unless we are specifically doing an earnings trade and we evaluate their earnings very carefully. So really, it's just batten down the hatches, make sure that we're ready for some potential volatility ahead, and just wait for those CPI and PPI reports to come out. and see how the very first earnings are starting to come out. And then we'll come out strong on Monday and start trading the markets. For now, the rest of this week is looking more like let's just wait and see. And as a reminder, tomorrow morning, Friday morning, I won't be able to do the live because I'm traveling, and I will have to see whether or not I'll be able to do the afternoon session tomorrow, but for sure I won't be able to do on Friday. All right, guys, have a wonderful rest of your day, and I will see you potentially tomorrow afternoon.